what's going on, guys? How are you? How are you doing? This is Shocks, and this is ShocksCapital FX. Today I'm back with a video that is going to explain how you are going to be catching the high of the day and the low of the day. So I'm going to give it clear to you how you are going to be predicting accurately these two price points. So before we go on to the next video, if you are new to this channel, be sure to subscribe and turn on your post notifications so that you don't miss any video from this channel. So guys, today we'll start from the whiteboard and explain what we really mean by predicting the high of the day and the low of the day. So this is how your day starts. This is the period separator that shows you where your day starts, and this is the one that shows you where your day ends, and this is what shows you where the next day ends. Bam. So what you are doing is, when price is moving in the day, in this day that you are seeing here, when price is moving here, what happens when price is okay? So this is the day before the day you are trading. So we just say yesterday. Let's just refer to this day as yesterday and refer to this one as today or this day. So what happens with price is price remembers, right? Price remembers. So when price is moving like this, when price is moving like this day, right? So it will print what is called a yesterday's high, or YH. Then it will print what we call a yesterday's low. So if you want to predict the high of the day or the low of the day, these are the best price points for you to use. It's either price is going to respect this, or it's going to just weak it and go into the other direction, or it's going to the low of the day, respect it or weak it. So either it's going to respect or it's going to manipulate. That's how you understand the high of the day. So you cannot catch the pinpoint low of the day. You can't do that, or you can't pinpoint the exact low or the exact high. But what we are doing is, we are helping you to trade as close to the high of the day or as close to the low of the day as possible. So imagine what it would do to your trading if you would get your trades close to the high of the day or close to the low of the day. Let's say you sell every day close to the high of the day. You are going to maximize your returns. You already know that. So that's what we are doing. So here we are not going to tell you to catch or to predict the exact high of the day. We are going to help you trade as close as possible to the high of the day or to the low of the day. So let's go to our charts and try to see how we do this, or how we can do what we are talking about here. So we'll start on this one. This is USD CHF, or on AAA FX. So this is what we are using, and this is what we are going to be explaining with. So this is the day before this day. You understand? We are using these 2 days, this day and this day. So want to trade here, what are you going to do? You are a guy, a girl who trades smart money concepts. You want to see a break of structure, you want to see a retest of an order block, and you want to see that as close as possible to the high of the day. So what are you going to do? You are going to mark out yesterday's high as what this trader did here. So this is the high, right? Yesterday's high here, marked with a red arrow, marked with an arrow, right? So when price retests or visits this one, you are not going to be trading right away. You are going to wait for the reaction of price. So remember, when you want to sell, you don't have to sell above the yesterday's high. Sell below the yesterday's high, as close as possible to the yesterday's high, but be below it when you want to sell, right? Don't be selling outside here. Be selling inside the daily, the yesterday's high. So what you do here, when price is outside like this, it doesn't concern you. You wait for price to move back under the yesterday's high, like what it did here. And if you are clever enough, you wait for a break of structure. After waiting for a break of structure, you then wait for a retest of this order block that you see here, and your trade will be here as close as possible to the high of the day up here, and you would have caught this move. So this is how we are trading. And then there is a second scenario, or a second alternative that you can use. Let's say this is the what? This is the high of the day, as closest to the high of the day as possible. You can wait for a pattern to print on the what? On the yesterday's high, right? You want to catch the high, or you want to be closer to the high as possible. So you wait for a pattern to print, right? So what we are saying is this is the high, the yesterday's high. Then price retest here and prints a railroad track. Who is not going to get that? So if it prints a pin, automatically that one, it's an M with a confirmation candlestick pattern. So that's what you want. That's what most traders want. So you will be having what we call a multi-session M. A multi-session M. And if you want to know more about multi-session M's, you have to know more about what? About BTMM, right? So that's what I'm saying. So if you come here, you will see that you have this as your yesterday's low, and price didn't get to your yesterday's low. So if it didn't do that, you are not going to force your trade up here. You are going to wait for the setups that gives you what you want. Okay, let's look at this one. This was yesterday's high, and this was a very good order block. Why? Because we had a very aggressive move down, and this was a break of structure, and this would be treated as a retest of an order block at the yesterday's high, and it would be close to the high of the day, like that. So that's what you are doing, and that's how you are going to be predicting the high of the day. So let's go and look at another chart here. So this is Euro USD. So this is Euro USD. So we can even do the same technique or the same strategy for identifying the low of the day. So we're doing high of the day. So this is the low, or the yesterday's low, and look at what price did. It was giving numerous patterns, and it was giving everything that a trader would want to see on a chart for a buy. So this is what we are doing. Price wicks below the what? The yesterday's low, and gives a morning star or an evening star, whatever that pattern is, but it's a star, I know that. So you have to see these types of patterns around the yesterday's low for you to enter a buy just above the yesterday's low. So do not get trapped by trying to get into the trade below the yesterday's low. Why? Because it might be going down, or it might not be a buy, right? So in terms of getting your trade above the yesterday's low, it gives you leverage in a way that price is kind of confirmed that it wants to go up by closing above the yesterday's low. So that is the trick that you are going to be using. And this is the yesterday's high that is marked here, and see what price has been doing. Your confirmation pattern was either this pin or these railroad tracks. This is the pattern that you already know. This is the liquidity grab, a break of structure, return to order block, and the confirmation pattern. So when you are trying to catch, or when you are trying to trade as close to the low of the day or the high of the day, you have to understand the what? You have to understand the confirmation candles, the confirmation patterns, because those are the patterns that are going to be helping you in your what? In your endeavors to catch the low of the day or the high of the day. Remember, this is the what? Yesterday's low, and price does weak below it, goes above, goes below it again, and goes above. So this railroad track would have been your confirmation for a buy, and look at what price did there. So this is how you trade, and how you try and trade as close to the high or the low of the day as possible. So this is what we are doing. So guys, if you find this helpful, let me know. And guys, this is what I am. Trade what you see. I'm Shocks, and I'm out.